Good evening, everyone. My name is Ellen Fred, and I serve as Assistant Director of Online Engagement for the University of Illinois Alumni Association. I'd like to thank you all for joining us for tonight's Career Connections webinar. We very much appreciate your support of our ongoing speaker series, and we are excited to welcome back several repeat attendees. Before I introduce our speakers for this evening, I'd like to take a moment to talk about some offerings from the UIAA that you can access from wherever you call home. First, if you're not already signed up, we invite you to join our online networking and mentorship platform, Alumni Link. You can visit alumnilink.illinois.edu to set up your profile and connect with thousands of fellow alumni from around the world. You can also join our book club by visiting pbc.guru/uillinois. Joining the book club is free and provides our alumni with an opportunity to connect with one another over shared interests in literature, history, and professional development. If you're looking for a way to get into the holiday spirit, we're pleased to share that our 2025 snow globes have arrived. This year's collectible captures Altgeld Hall in all its winter glory, complete with the sound of Hail to the Orange. You can receive a snow globe by becoming an annual or a life member of the UIAA, or spread Illini cheer by gifting a membership and a globe. Current members are eligible to receive a globe with a special $150 gifted donation. Full details can be found at go.illinois.edu/membership. Quantities are limited, so we encourage you to take a look soon. Now, let's get to the reason we've all logged on tonight. I'm honored to introduce our speakers for this evening, all of whom are joining us from the University of Illinois Community Credit Union. Susan Toalson McGinty is a certified financial coach and the Chief Growth and Advocacy Officer at the U of I Community Credit Union. Sheri Shannon is a certified financial coach and the Assistant Vice President of the U of I Community Credit Union Partnership Program. And Liz Welch is a certified financial coach and the Associate Director of Partnership Program at the U of I Community Credit Union. With that, it is my pleasure to turn over the program to our partners at UICCU.
Hello.
Hi, everyone. How are you tonight? It's so good to be here.
We are coming to you from the University of Illinois Community Credit Union, right down the street from Assembly Hall.
Or State Center.
Exactly. We're here with our Do More Good studio. I like to think it's our ode to the Cubs.
Yeah.
Sure.
You know what? This kind of sets up how this whole experience is going to be. The thing about managing your money, it really is more of a journey than a destination. And there's a lot of different points of view. So we're going to offer 3 different opinions, and we're going to talk about some very money basics with you all today. Encourage you all to pipe in with your own wisdom and to also share any questions that you have along the way. We have a fabulous helper along the way. James Palsy is out there, and he's going to be with us and sharing those questions as well.
Yep.
We're excited to be here with University of Illinois Alumni Association. Thank you so much for this opportunity. We have had a very special relationship being the official credit card of the University of Illinois in this partnership for the last 15 years. It has just given this credit union so many opportunities to connect with the Illinois alumni throughout the entire country. So we love this partnership, especially all of our Illini clubs and all the many Illini as well, including our latest Illini, who's a football player. We like to call him Unk, and he is there sporting our signature credit card, but he's also going around town and he's being kind of a restaurant foodie, sharing about all the good things. Also on your screen, you're seeing, you want to introduce
Yes,
us?
Yes.
this is Fiona. So also has a little fun giveaway. If you guys
Yeah.
want to drop your address in the chat, we will send you a Fiona sticker. Fiona is our financial wellness guru. We have created her this year, and she's going to join us in all of our presentations on financial education to get the word out. All right, starting right into it. The credit union difference.
Wow.
Why
so
are they
nice.
different?
All right, Sheri.
Yeah.
Sheri just went and became a certified credit union expert. So she came back on fire. She's always on fire. Do you want to share a little bit about this philosophy that sets us apart?
Yeah, credit unions really, our mission to do more good in our communities, bringing financial resources to consumers that they might not be able to get anywhere else. But we're a great financial opportunity for everyone in our communities. And what allows us to be able to offer better rates, lower fees, and do things like free financial education in the community? Well, a couple of things. One, we have a unique business model
That's right.
where the people that bank with us are really our shareholders. And so as members of the credit union, we pay them back in the form of those better rates
Okay.
and lower fees. Additionally, we have a completely volunteer board of directors. Everyone that serves, and with great passion, I'm going to add, because I've been worked with a lot of different board members over the years, not just here, but other credit unions. And all board members at credit unions they're volunteers, they love the credit union movement, and they're very passionate about sharing it in the community. And they do it for free, and they put in a lot of time, but it's why we can do the things that we do for our communities. So strong community focus, financial education, volunteerism, and just giving back to our communities is really what we're all about.
Yeah, absolutely. And I want to add that because we do have better rates, lower fees, and better savings rates as well, that we're an excellent choice for those savvy consumers. The biggest challenge you find in credit unions is most consumers do not think they can bank with them.
Exactly.
So this is just another great reminder that if you're seeing this and you want to work with us, or you have questions, or you're just kind of curious about banking with U of I Community Credit Union, just know you're available to do that because you're watching us and you're an alumni.
Yep, that's right.
Oh, this is everything,
Yeah.
isn't it? Okay.
Yeah, this is one of my favorite
Same.
visual aids when we were talking about financial health and how important it is to our lives. 40% of Americans are struggling with their financial health. And what happens when they're struggling is it causes issues with their physical health
That's right.
and their mental health. And we know that when we have all three in a line, we've got this great quality of life. But we really, I don't think that as consumers, we always think about how our financial health affects both our mental and our physical health.
I like this quote that's about bi-directional relationships. And it talks about how your financial challenges, they can make your mental health worse. But
Yes.
if you are already in a bad mental health state, it can make your financials even worse.
Oh, that
Yes.
is
So
makes so much sense.
they really do go together. They are hand in hand. If you're having struggles with your mental health, you're gonna have struggles with your financial health just as much.
You know, we're a society of well-being. Like we hear about your overall well-being and everywhere we look. And we talk about how your physical health and we talk about how your mental health, how important that is. But the reality is, if you're burdened with the pressure of paying your electric bill or your water bill or struggling with food costs and escalating, things are so hard with this inflationary market. It's very hard to find the motivation to get off the couch to do that walk.
Yeah.
So that intersect between your financial health really having and bleeding over into your physical and mental, this quality of life, like Sheri and Liz were talking about, really lives in between. And it looks like we have our very first
We
question.
do.
We settled, so thanks for our time, and is wondering if there will be a recording or transcript.
Yes, there is
Yes.
a recording. Thank you to the Alumni Association. So
Yes.
there will be a recording of this as well. Thank you.
Yeah, thank you.
All right.
All right. Yeah, this is the real right here.
Yes, it
Sheri, you
really
wanna-
is.
wanna get us started on this?
So knowing that over 50% of our nation is struggling with their finances is hits home with me.
Yeah.
We strive, this is what credit unions strive to do, is help people not struggle. But the reality is we're experiencing these physical and emotional problems because of it. And even employers are seeing this in the workforce.
Productivity loss, delayed retirement. That was a big one.
Yeah.
That folks are unable to retire and enjoy that end of their life.
Yeah,
Because
exactly.
Money is so hard.
Right.
That's a big one.
It
And
is
that's what
a big
employers are seeing. They're seeing that that we have that delayed retirement.
We're having that delayed retirement, and that actually affects all the next generations coming into the workforce.
Yeah.
So it really has a trickle down effect. And the reality is, oftentimes the anxiety that you have is the unknown, or you don't have trusted information to feel like you're making confident decision making. And I think that's the part that's really hard is where do you go for trusted information? Where do you go to feel like you're going to get the real about your finances and not being thought that you're just being sold. And that's part of what we want to talk about today. I think what's important when I look at the 77 percentile, that's 77 percentile across all socioeconomics.
Mhm.
And you know, America's got a money problem.
We
I mean,
do.
we know we
Yeah.
do. It happens at all different levels. And oftentimes that's where, you know, you can really kind of get that help and start to realize the challenge with it is we put a lot of pressure on ourselves, but we're not getting this information in grade school, junior high,
No.
high school, and
Or
not
college.
even in college anymore. So the reality is we need to put that shame and judgment away and just come to the table and let's get that real information.
But we are a resource for that.
Absolutely.
We are absolutely a resource for that. So these indicators of financial health, this is the Financial Health Network puts out a pulse survey every year gauging the financial health of our country. And in that, these 8 indicators of financial health really identify only 31% of our country is in this situation where they are financially healthy.
Well, and we often wonder, like if you're sitting here thinking, I think I'm good, right? Let's go through that list. You know, from a spending perspective, are you spending less than your income, right? Are you able to pay all your bills on time? Check. If you're in that position, celebrate that. You're in a good spot. Now, do you have that sufficient savings? Not just in your 401k, although that's important for long term, but do you have an emergency savings?
Right.
So you're able to absorb some of those challenges of life and not feel like you have to put it on a credit card. Or if you're putting on a credit card, you're confident you're going to be able to pay that bill. If you're living in a spending save way, that's 2 out of 4. That's fantastic. And then how about your borrowing? Are you able to have debt that you can manage? And you know, we see this in young adults where, you know, you don't have a lot on your credit report. You go to buy that first major purchase, and that's often your car loan. And, you know, you think you can afford X, you go to the dealership, and because you don't have anything on your credit report, that includes they don't know what your apartment rental is.
Right.
They don't know if you have childcare costs. They don't know if you like to, you know, spend money on food. They're going to maximize what that payment can be. And oftentimes that can get people sideways.
Yeah.
That's just kind of a word of warning. And then do you have prime credit score? We're going to talk about that too, the cost of not having prime credit. And then a plan. Insurance. Now that one surprised me that insurance popped in, but you know, insurance is a cost. And are you able to afford the proper insurance for your home, your car, your life?
I was gonna
And
say,
then
not
being
just
able
home
to
car,
plan
right.
ahead financially. Ladies, anything to add on this?
Well, I just love the insurance part, and I'm glad this is part of the Pulse survey because so many times insurance is the one thing that people don't invest
That's
in
right.
because they don't think they can afford it until a situation arises where they lose their home, there's a fire, whatever it is, maybe it's a health or a car accident, but then they're without and they have no way to replace it. And so I think that's one of the things I like that we're addressing that.
I agree. I agree. And I think this is a really good measure of financial health. Now, listen, we talked about financial wellness as being a journey, depending on where your life stage is. There are different times in your season of life that, you know, some of these are going to be a little out of alignment,
Right.
and that's okay. But this kind of gives you a pretty good balance. And like Sheri said, only about 30% of us are able to achieve all of these at any one time.
And going back, you think, so like for me, I am a, you know, young quote unquote young.
Yes, you are.
You are young.
You are.
Yes.
She's the baby.
With a family, and we are just, starting out the journey of money. And so
That's right.
we don't fit in that 31%, but we're working on it. We have the plan. So we have, parts and pieces that we're working on. And
for that.
And you have, some that are into the retirement age, and they are probably in that financially healthy 31% because they've done the things, they've had the life, they've gone through it all. So it's the different stages of life, and not kind of beating yourself up for,
Oh, no,
not,
absolutely.
getting.
I
Right,
appreciate that.
because
Thank you.
57% of us are living in between, right? We're at this what's called financially coping, which means that we're doing a lot of this, but some of this isn't happening because we're raising families, right? So our money's going to childcare, we're paying off student loans, or maybe both, right?
And oftentimes both.
Yes.
Yeah.
Yes. And so that's where I would say the majority of us are living in that
Yeah, I agree.
57% of financially coping.
So we share this because we've been asked the question, like, how do I know if I'm good, right?
Mhm.
And when FinHealth came out with this information, it really was able to just kind of help, us and our members kind of have an indicator on where are the areas that they should be focusing on. Yeah.
And I just want to share, I want to put a plug in for what we have available to you for free is on our website. You can take a free financial wellness assessment. It's a little bit different than the Financial Health Network survey, but what it's going to do, it's going to tell you where you're at, and then it's going to lead you to resources online through our financial wellness platform that are going to help you through that guidance as well.
It'll really be tailored to you and
Yes.
what you are looking
Yes.
for.
Yeah.
I do have a question.
It says, how does credit unions keep up its interest rates on deposits with consumer inflation? Does it revise it in line with policy rates or as per local inflation?
Yeah, no, that's a really great question. And we follow the Treasury and we also follow the Fed. And we're ultimately able to price as we do. And if you look at our loan rates or our deposit rates, they're comparable. There are times where we're going to be, I would say, for the most part, from a bank perspective, from our bank competitors, that our deposit rates are going to be more favorable than some of our partners. So take a look at that. We just ran a really beautiful CD special for the Alumni Nation. I think it just hit on November 7th. So we're always putting out some of those specials specifically to the Alumni Nation. And if whoever indicated wanted some additional information, just note it in the chat and we'll be sure to circle back with you. The loan rates, again, are tied to the Fed rate as well. And we can make some of those decisions about where we are from a pricing perspective. But very good question. Yeah.
Thank you.
Okay, so all right, so we teased you. We all want to live in money nirvana. We want to work out. We want to meditate. We want our bank account to be abundant.
Yes.
Who doesn't want that?
Right. And we want to retire early.
Right. Or if we wanted to start that wonderful business, do we have what we need?
Right.
All of those. But let's be real. We're living in really high inflationary times.
Yes, we are.
And I heard it once said, it is hard on your wallet. And it is, it's hard on your wallet. So here are some additional things that we've identified. And I'm curious, what are some things that you've identified that undermine your money zen? Because we all want to have that money zen feeling.
We do. Yes, we do.
But not checking your spending, that's a really big one. And
Yeah.
and it's kind of small. Like think about how we used to do checkbooks. I know no one does them anymore, but that was a way that like my mom would check to make sure how much money we have. And so she was constantly checking the spending habits. Whereas now we just swipe a card and move on with our lives.
Yeah.
So we're not always checking in and seeing where are we spending our money? Did we need 5 Polar Pops from the gas station this week? Or
Yeah. I mean, how many times have you checked your home banking, right? You're on your mobile app and you see the balance. You're like, oh no, there must be fraud.
something happened. I didn't do that.
No, I have more money in there.
Right.
And you're going through your transactions thinking, certainly there's something I'm going to dispute.
Yes.
And then you're like, oh, I
Nope, that was
forgot.
me. I
I
forgot
forgot about that lunch.
Or that Amazon order that
Right.
those don't come out right when you place the order.
Right.
So if it's not
Yes.
shipping for a week, that $200 that you spent on Amazon is gonna come out a week later than you were
Exactly.
prepared for.
Right.
So it's constantly checking and finding the best way to do that, whether it's handwriting it out or
Mhm.
following an app or just checking every day, make
Or,
sure that it's all aligned.
well, and it's checking, instead of going to a check register now to see where our money's going, we have it on our phones,
Yeah.
right? And so you have easy access to take a look on a regular basis. I would say I like to look at mine daily
Yeah.
because I
I
have
do
a
too.
tendency to forget.
Same.
Case in point, this morning I had quite a bit of money in my checking account, right? This afternoon, I didn't. You know why? Because I forgot that I wrote a pretty big check for a new furnace.
See? And
You
those
know?
checks, they take a long time to
Yeah.
come out
And
sometimes.
they do, and
Yeah.
that becomes really challenging.
Yeah.
I will tell you, most of us, and we have a fabulous home banking app, but I gotta say, most banks have really good mobile
Mhm,
banking apps.
mhm.
Get to know the technology that's wrapped into it because it can give you alerts. You can set alerts for under $100 or $50 or $20 or $250 or now, you know what I do because I don't trust myself? I have an alert anytime money comes into my checking account
Mhm.
or anytime money leaves my checking account, I get a text message.
Mhm.
And you
Same.
know what? That really helps me.
It does, yes, it does. That's how I knew I had a problem in my check. Wasn't a problem, it was just my balance now is lower than I
You
thought it
had
was.
such good money in the morning.
Right, I did, I had really great money then.
And not so much.
Webinar, feeling so good about myself, and they're like, darn it, there goes my cash. Because that's just the real.
Yeah,
But just think about what are those habits that are undermining you? What are those tuition payments, or what are those unexpected payments, or now the rising cost of healthcare?
mhm.
Yes.
Benefits
Right.
are becoming. So all these things that we didn't have worrying about as much 5 years ago, it's really making that salary really work very hard for the money that we have.
It really is.
All right, so now let's think about, we know where we want to be.
Mhm.
We know the indicators. We know those darn money things that undermine us.
Now,
Oh
What is
gosh,
it?
there's
We got
more.
there's more. There's more things undermining our ability to be financially well.
So bad.
Yeah,
sports betting,
yeah.
1 in 3 US adults place money on sports bets.
Wow.
So young men and
Mhm.
actually even older men,
Mhm.
anything from 18 and up, y'all are being targeted.
Yes.
And it's little bits of money here and there. It doesn't seem like a lot. But I gotta tell you, ladies, we're not alone. We're not, we have issues too.
Mhm.
Liz, you want to share your
Yeah.
story? Because I
Yeah.
think this is important.
So the online games, so like our phones, right? We play those games all the time. I have a friend who Monopoly Go, that was her thing. Every night after her kids were in bed, she played Monopoly Go. What she was also doing was, in order to finish this round, she needed more coins. Well, so she was spending $1, $2, $5 every night to get more coins so she could finish her round. By the end of the year, she spent $500 on Monopoly Go.
See?
And
There
it was
is.
so easy. I mean, it was the 99 cents here, the $5 there. And she didn't even think about it until she went through at the end of the year all of her statements and found I spent $500 on a game. And yet she's still playing it. She just now is more thoughtful
Right.
as to not buy the coins and the whatever you needed to get to the next level.
And that's all designed to give you a dopamine hit.
It is.
It really is.
Electronics, what we're carrying in our phone, in our hands, right? We all carry it.
Mhm.
We know if we've lost our phone so much faster than we know if we lost our wallet.
Agreed.
It's our digital wallet, it's our social,
Mhm.
it's our gambling, it's our friends. And the gambling and the games get a dopamine. And it's all been designed to help you win. I mean, you're supposed to
Yeah.
win
That's
until you
the goal.
don't.
Until
Right.
you don't.
No, you don't.
And that's when you're buying those coins.
Yes.
This is not an area of judgment. This is an area of awareness.
Mhm.
And I love what you said about your friend. She's still playing,
She
just
just
with more
knows.
awareness of
Mhm.
those decisions.
Understanding that if I spend that dollar every single night, that's
Yes.
gonna add
The
up.
choice.
Yeah, the choice.
And now she's being aware of that
Mhm.
choice instead of just kind of being in that state of mind
Mhm.
where you're not even being mindful and you're half asleep. And then, because our credit cards are attached to our phone.
Uh-huh.
Very easy to spend money.
Very easy.
Mhm.
Very easy. Be careful about all your shopping at that time
Right,
too.
exactly.
Very
Yes.
So
Yeah.
just phone awareness, something that we're really starting to see, it's been probably the last couple of years.
Yeah.
We're talking about gambling here, but really realizing it's the entire gaming
Mhm.
industry
Mhm.
in its entirety.
Right.
Oh, gosh.
Switching
another
gears,
shift.
now,
Yeah.
We're just
Yeah.
boom here.
No, we're bringing awareness.
That's exactly right.
Bringing awareness.
switching
Yeah.
gears a little bit to fraud.
Yeah.
Mhm. Yeah. The rise of digital is really, it's good and bad, right? Yeah.
AI, it does, it makes our lives easier. I use it a lot, to be honest with you, more than I realize that I do. But it's also what's getting more attacks.
It is. We're seeing a lot of an increase in AI attacks because they can mimic our voices. They can send us texts and emails that are properly formatted
Correct.
and the grammar is correct.
Correct.
And so AI is really, it's good for us, but it's bad for us because the fraudsters are really taking advantage of
And
it.
you
really are.
and you think about it, like, for me, I can tell my AI, that email sounds like AI. I need it to sound like me. And it will spit out and it will use my hi, it will use my definitely, it will use all the language that I use because it's learning me as I talk. And it makes my email or my post or whatever it is I'm doing sound just like me. And I'm like, okay, well, if in these little bits that I use it,
Mhm.
I'm able to do
Right.
that. So how are the fraudsters able? They're just able to tell it anything and get exactly what they need from it.
I think the big thing we need to be aware in this space is they're using a very high pressure technique.
Mhm.
So whatever you're seeing, either in conversation or in email, everything is very urgent. Everything is like right now. It's very compelling. There's this risk. And I have a family member that just went through something like this. And the reality is, this person was feeling very much like I know better, but in the moment got caught up in
Yeah.
the pressure of it. And the reality is, no banks, no financial institution would ever highly pressure you to make any decision, especially financially, on the spot.
Yeah.
And if that happens, you just hang up.
Mhm. Yeah.
Oh, and so here are the different types of attacks that you
Yeah.
really do need to have awareness of.
Um, the social engineering and surveillance is really important because they're really getting very sophisticated with social engineering. And so that's going along with what we were talking about.
And that's the AI factor for sure.
Yes, it
Yeah.
really is.
They learn your movements, they learn what you're doing, they learn the way you talk, and then they can get you so fast.
That's right. That's right. And then, all the multi-factors, just the spywares and the ransomwares, just making sure
Yeah.
you are just being mindful of that and you've got those two-party factors. I actually love that. I
Mhm.
remember at first it was a little inconvenient, but then when you understand the protections that
Yeah.
are involved, I have no problems with those
Same.
little extra inconvenience because the hassle of being taken advantage of or, seeing that you've been a victim, it's worth the time up front.
I
Yeah.
would agree. Agree.
And there's lots of different channels. So it's not just your phone or your email, but
Yeah.
there's so many different things. I mean, how many times are we on Facebook and they understand what we're saying, right? So then those ads pop up. Well, those ads are those fraudulent websites.
Yeah.
Right.
They want you to click on that link because, oh, you need cowboy boots. Here is a link for some cowboy
Cowboy
boots.
Right.
And they want you to click on that because they're going to take you to a website that is not real. I always like to tell any members I'm speaking with, making sure that if you're seeing those links and you're like, I really want those boots, figure out the name of the company and go out to the website
Oh,
and
that's
search
good.
that yourself.
Uh-huh.
Do not
Yes.
click on those links within those emails or those Facebooks or Instagram ads that you're seeing because
Exactly.
those are the ones that they're trying to get you to click on because they know that's what you're talking about. They know that's what you need. And now it's here right in your face constantly over and over. Let's get you to put your information in.
The other thing about your phone, and I think we'll all appreciate this because, for the most part, we know everybody who's calling us, right? We should have them attached to a name and a face and all the things. If you see a number that does not look familiar, let it go. And one of the things that we were taught is that they're actually kind of even phishing you to see who picks up the phone. So that gives you permission to don't pick up the phone to anybody you don't know.
Mhm.
And if it's important, they'll leave you a message,
And
right?
you call them back.
And you know that it's not when they don't.
Mhm.
And then they actually rate you as a higher rate of a victim if you do pick up that phone, because what they're thinking is this is somebody that is who's immediately going to engage.
Yep.
And what they're looking for are individuals that are willing to engage with them.
Yep.
So really just trying to not even stop it at the beginning and not engaging at all is your best bet.
I agree. So we talked a little bit about how we can, protect ourselves. You talked about those multifaceted authentications.
Yes, yes, yes.
So passwords, having a code, email or text to you that you have to type in. A lot of times, even your financial institutions on your banking apps, they're going to have those for you. So every time you go to do something, they'll send you that code that you have to put in, using your face and using your password. All different things that you're going to get. We talked about setting up those alerts. So every single time money comes in and goes out of your account. Setting up those alerts is a great way to protect yourself with your money.
Well, I got to tell you, we're going to talk a little bit about ways you can protect yourself that I now have, and we're going to talk about credit freezes and different ways you can monitor. But it is interesting how many times people are looking to steal your identity. And these are all things that are not just going to protect you from frauds, but really help you protect just maintaining your identity.
Mhm. We talked about, told them about not answering those calls,
Mhm.
but also making sure that you're not clicking anything. So how many times have we gotten a text message that says your UPS order is lost in transit? Click here.
Or IDOT.
Yeah,
Yeah.
full is past due. You need to pay it.
Yeah.
I can't tell you how many times I'm like, I haven't driven anywhere.
It's urgent, right? It's
Right.
an urgent, they're trying to pressure you.
Go out to those websites. So go out to IDOT, go out to Amazon, go out to UPS,
Very good.
look it all up. Most likely you have the apps on your phone anyways for the things that you're purchasing and doing. Don't click on those random text messages
Very
that come
good.
in.
Thank you.
All right.
We're gonna get into a little
Now,
money management here.
I'm excited to share this next bit because Sheri, I think you've made budgeting in a way that I used to think was a 4-letter word, and I follow your system now.
Oh, I do too. I love it. I think it's smart. It's easy because I don't like budgeting.
I know.
so Sheri likes to say that a spending plan is better than a budget
Yes.
because it's flexible.
Yes, yes.
All right. Take it away, Miss Sheri.
So this 50-30-20 rule has actually been around for a while. Senator Elizabeth Warren and her daughter really developed this plan, and it just makes sense.
Sure does.
It's so smart because putting the work into building this plan takes a little bit of time, but once you've built it, once you know that all of your needs are being met, you've got a roof over your head, you're paying the bills that you need to pay for utilities, phone, childcare, all the things, you're putting money towards your future in savings. Or sometimes that 20% is towards high interest debt repayment because we want to make sure we get all of that paid off so it doesn't interfere with our savings. Then you have money to do the things that you want to do. And so that's travel and entertainment and dining out or whatever it is, streaming apps. If your friend wants to play Monopoly Go, that's coming out of that want.
That's
So, it's a simple rule. But like I said, it takes some time to set up, but once you do, you kind of sleep easy knowing that the bills are getting paid.
So what's interesting about this, and I want you to talk to this, is if you look at this plan, 30% of wants, that's just wants, that's no judgment, that doesn't make you feel bad, you can just pay it freely, spend it freely, is higher than savings.
Yes, that's because we want to keep that savings always at 20%.
Yes.
Your wants and your needs have to be flexible because your lifestyle is flexible. It's going to change. My life is in a different place than Liz's life right now. So her plan could look a lot different than my plan. I'm I'm probably finally at a point where I'm at a 50-30-20 in my life, but that's because my needs are different
That's
now.
exactly
I
right.
don't have all the needs. I don't have the car payment and the childcare and things like that, right? Liz has got childcare. She's in the middle of her life. She's
I'm more at a 70-10-20.
right,
And that's real.
and that's real,
And that's real.
and that is real. And so
Childcare it's a lot.
right,
Childcare is a
right,
lot. And you know, the
exactly.
other part about this is, and how many, and now I'm kind of talking to couples out there, that we have best intentions, that we're just going to save
Mhm.
and we're going to spend money for needs. Well, that gets really boring real
Yeah.
fast and real unsustainable. And so what happens is you fall off the wagon.
And you spend that money that
Yeah.
you weren't prepared to spend.
Exactly.
100%. So really what I think is so balanced about this is it's a very sustainable approach that we are all working very hard for the money that we're bringing in, and we're able to find joy from that. Because if you're not having those moments of joy, then the reality is it's hard to plan for the future because you really want to get into that money nirvana.
Yeah.
So really acknowledging that is very important.
We do have a question.
Yes, can I open a checking account at the credit union? Is there any benefits for students?
Well, let's take that information and let's follow up with that person.
Yeah.
Thanks, James.
Definitely follow up with you. One of the things I want to note on this plan, that 30%, sometimes people say, gosh, that's actually a lot of money, right?
Right.
But it doesn't have to be 30% every month,
Correct.
right? So thinking about, I want to take a big vacation. So how much of that 30% every month am I going to put towards my travel?
Mhm.
How much am I going to put towards maybe a big dining out or, entertainment? So you don't have to. And oh, by the way, if you didn't spend your whole 30%, you can throw that into savings.
That's
You
exactly-
can save more than 20%.
That's right. That's
it's
right.
okay.
Very good. That's good. That's good. And that's the flexible nature
Mhm.
of this. And I love that you said your plan looks a little bit more like 70.
10-20.
Mhm.
Yeah. And
Mhm.
that's real
Yeah.
too.
It's
And so
real.
just knowing that this too is just a season that you're in,
Mhm.
and that there's, your babies, well, your twins are getting older.
They are 3 now, but we still got lots of years of daycare.
Yes,
and
yes.
11 years. That's right. 2 more years and we can not be in daycare, hopefully. But still, it's a lot.
I love it. When Sheri first brought this to to just the education, honestly, it adapted to me too. Instead of having to look at line by line or keeping a journal or keeping a spreadsheet, I just like the macro numbers. And so many of our credit cards, our debit cards, our bank accounts will really kind of populate in these ways.
Mhm.
So it just helps you in a very efficient, fast way, kind of looking. And then if you see that things are out of alignment,
Mhm.
that sometimes happens,
Mhm.
that's an opportunity then to relook and kind of dig
Mhm.
into some of those sections.
Yeah, it really is.
And
I love this.
I love how you talk about it doesn't have to be 30% every month. So, I say 10%, and that seems like a very low number.
Right.
And so it's like, do I get the joy and the fun and all the things? But I have some months where I don't do anything extra because, life's crazy and busy. But if I save that 10%, now I could have 1 month where, we have extra date nights, or we go out of town for a long weekend, or you can do something fun with the kids because we've saved up from those other months of our wants. So it doesn't have to be just savings, but you can take your wants and save it into its own category so that maybe you have 1 month that you have 40% now that you're spending on your wants and going and doing and having those things.
I love that. And I will tell you, one of the way I have to visualize my money.
Mhm.
So if you ever looked at my home banking, you'll see my checking account, and I think I have like 5 or 6 active savings accounts because I have a Christmas
Mhm.
account,
Mhm.
I have a travel account, I have an auto account,
Mhm.
and it's not that I'm putting a ton of money in there, but to your point, if I don't take that 10%
Mhm.
and put it someplace else, I'm afraid it's going to get squandered.
And get
Mhm.
used.
So
Yeah.
that's just for
Yes.
me, separating things out is
Yeah.
really nice. And
Really
in
good.
home banking, I can just spin up my own savings account
Mhm.
in my own account. Like,
Yeah.
oh,
You can have as many as you want.
Yes. And
Yes.
I just think that allocation, so the fact that you do that is a really good idea.
And it's
Yeah,
it's
it's
almost
really
like
good
the
idea.
envelope method,
Mhm.
long time ago, we had the envelope method
And
where
we
you save
still
cash.
Yeah,
We
it is,
still
it
have
is.
it.
But you can do it digitally now with,
Yeah.
I mean, at least with our credit union, you can have as many savings accounts as you want.
Yeah, and they're
And
free.
you can use them as your envelopes
Yep.
and it's all digitally as opposed to physical cash
Mhm.
in your home.
Awesome. Thank you. All right. Why does a credit score matter? Well, guys, it's
Yeah.
everything. It's
Yeah.
kind of like your adult GPA,
Yes.
right? It's going to make or break, those big deals, a credit card, a car loan, a student loans, mortgage, your next dream job, or your next apartment.
Right.
And also insurance. So they're
Mhm.
pulling credit on just about everything because it
Cell
really
phone
is
plans.
cell phone
Cell
plans.
plans,
Oh
yeah.
my goodness.
Yeah.
It's again, it's a way for you for creditors to determine your credit worthiness.
Your responsibility.
Yeah, and your responsibility on that.
Mhm.
So we're going to talk a little bit more about credit scores right now because everybody really loves this part of it. I do too,
Mhm.
because this is the real, guys.
Yeah.
This came out of Consumer Reports a couple of years ago, and it was the best illustration that shows the difference between having a good credit score and the cost of not. One thing that we like to ask when we're live is, what do you think the experience is like if Susan's going in to get a car at 600 and Liz is going in to get a car loan at 820? What do you think our experience is going to be? Do you think Susan's experience is going to be less than Liz's because Liz's is such a higher credit score? Or do you think I'm going to have a better experience? What do you think? We're both going to get a great experience.
Right.
Mhm.
And so you're never going to know from an experience perspective how, if that's going to be different. It's not going to be different for Susan, but the difference for me will be the cost in that loan
And the interest.
and the interest.
Yeah,
So
yeah.
that's the real. If you don't know what the other person is getting, we're both going to have really great customer service because the industry is all about service. It's
Mhm.
table stakes.
Mhm.
But the reality is the savvy consumer, Liz, who has really protected her credit score, is going to maximize her buying opportunity.
Yeah.
All right, let's do it. Okay, Sheri, you want to talk about this?
So this is, it's important for us to understand what goes into my
Yeah,
credit score,
that's right.
what makes up my credit score. So this is a basic FICO scoring model. We're looking at 5 things, right? 35% of our score is our payment history. So that's, paying your payments on, making your payments on time, not missing payments. All of that contributes. That's 35% of your score. 30% is how much you owe. So if you're utilizing less than 30% of your available
Right. Like a credit
credit,
card.
yeah, then now that's 65% of your score. So those 2 things are really something to pay attention to. Making sure you're making your payments on time, even if you're only making the minimum payment, make it on time. Don't be late. Don't miss a payment. Here's what happens when you're late and miss a payment. It stays on your credit report for 7 years. It takes 7 years to rebuild that. So even missing one or being late one time affects your credit
Yeah,
score.
significantly. The interesting thing is to grow your credit score takes time.
It does.
To ding your credit score can take 1 month.
Instant.
Yeah,
Now,
it's
when we
instant.
talked about technology earlier,
Mhm.
we're big on using your technology to book all your minimum payments once a month. And I say that as somebody who actually likes to have a date with her money and write out on my bills,
Mhm.
and I'm still using checks because to me, I know, it just helps me stay in relation
Yeah,
with what my
I can
money
see
is.
that, yeah.
Right.
But the reality is, I also want to have those minimum payments automatically set
Mhm.
because, let's say I, got the flu, or let's say somebody got injured and it took my time away. Life happens. So you can always go in and pay more, but just knowing your minimum amounts are paid every single month, that's 35% of your score, right?
That's so smart. So smart to
That's it.
set them up automatically and have it set up that way. I like that. Very smart. You're so
Okay,
smart.
good. Thank you, honey.
Your length of credit history, this is really important too. While it's only 15%, this is why it's important. When you pay off a credit card, do not close it.
Don't close it.
Because if you close it, you're losing all that credit history and it's going to drop your score. So leave those credit cards open.
Use them once a month.
Yeah, use it once in a while for, buy a
Year,
tank of
whatever,
gas or
right.
whatever. It's something you can pay off when the bill comes in. But just to keep them active and alive. I talk about this all the time. One of mine closed and I didn't even know it.
Oh, no, because that happens because you didn't use
Yeah,
it.
I use them.
And I completely forgot about it. It was a store credit card
Mhm.
and it was one that I used periodically, but one day I got this notice that it was closed and I'm like, oh my gosh, I completely forgot about it.
Yeah.
So that's another thing is paying attention to what you have, what credit cards you have in your wallet too, and keeping them active so you don't lose that credit history. Your types of credit and new credit, these are smaller portions, but still important. Types of credit. Revolving credit, these are credit cards, home equity lines of credit or other lines of credit. So they never end. They're always available to you. And then your,
Installment loans.
thank you, because the word just went right out of my head. Your installment loans, your mortgages, your auto loans, your personal loans that have an end date. So having a mix of those helps your credit score. And then anytime you get new credit, you may see your credit score dip a little bit temporarily. It'll come back.
Right.
It's just a temporary dip. But if you're out there applying for new credit multiple times, you're getting all these new credit cards, that is going to really, you're going to see a good dive in your credit score, and it will take a while for that to come back.
Just be mindful of that. But the other time is, like, let's say you're wanting to buy a house and you want to shop the market, because you should shop the market.
Yes.
You have 30 days to apply with one financial institution, and you can apply with as many as you want within a 30-day period, and it will only count as one.
Same with buying a car.
Yes.
You're going to all the different dealerships. They're only going to count it as one, as opposed to maybe you went to 5 dealerships, they all pull your credit.
Right.
As long as you're in that 30-day period, it's still only going to be that one ding.
So those
So
are the only two nuances, but it makes sense
Mhm.
because definitely want to make sure that consumers are getting the best deal.
Yeah, absolutely.
Okay, we talked about fraud. Liz, you wanna
Yeah.
talk about this?
annualcreditreport.com. This is such a great tool. Ever since COVID, it went from annual to weekly. So you can weekly pull your report. It's not going to give you your score, but it will give you your report for free. And going through your report is so important. Number one, for fraud. You can go out there and make sure that no one is taking out credit in your name, making sure that everything out there is true to you, and also just knowing what's out there.
I agree.
Because, if something gets sent to collections and you missed it, you didn't
Correct.
know, that could be really hurting you and you have no idea. And maybe it's something super easy that you can fix, but if you don't know about it, you're not going to know until it's too late, or until we're trying to buy that dream home or that car.
Mhm.
And now you found out that you have these things on your credit report. So it is making sure, constantly checking it. But the nice thing about annualcreditreport.com is if something's out there that is not you, you can dispute it straight from the site.
That's right.
And it's going to walk you through the whole process of what you need to do, who you need to contact, all the steps, and get it off that report for you. You can also freeze your report, your credit from here, which is so great
Mhm.
because then nobody can take out credit in your name, including you.
Including you.
I always in all my presentations use Sheri as an example because she has hers frozen because she's a good child.
I'm so fearful of identity theft.
So she always has hers frozen. She went, yeah, I should tell you tell the story, but she went to buy furniture.
You tell it.
I tell it all the time. She went to buy furniture and forgot that she had frozen it, and was able to, while she was standing there in 2 minutes, unfreeze it, have them run her credit, buy her furniture, do all her things. Before she left the store, it was frozen again. So it was a small window of time that it was unfrozen, just enough for her to get what she needed. And then she was able to freeze it back up and protect herself. So annualcreditreport.com, I cannot stress enough how important it is to check your report, freeze your credit if you feel like you're afraid of getting identity theft, disputing anything that is not you, making sure that it's the right employer, the right address, the right name, everything is correct and is you.
I think that's so great. And this
just-
came in about 2009.
Mhm.
Prior to this, it was really hard as a consumer to have a place to really do disputes.
Mhm.
And the system was designed that it wasn't favorable to the consumer. It's changed now.
Mhm.
So now when you log a dispute, your creditor has, I believe, 30 days
Mhm.
to say something. And if they don't, it will roll off.
Yeah.
So dispute the things that you need to dispute.
Yeah. Two things I wanted to say. Number one, the best thing about this site, I mean, all the stuff that is on here is so good,
So good.
but it's free. It's absolutely
It's free.
It's all free to you.
It comes from the federal government, so
Yes,
it's all free.
it's all free. Check your report from all three credit
Yes.
bureaus
Mhm.
because
That's right.
not all creditors report to the same bureau.
That's right.
So if you don't check all three, you could miss something for sure. So
Yeah,
make
this
sure you
is
check
this
all
is our
three.
gift to you
Yes.
guys, annualcreditreport.com. We took a picture of the homepage just so you know what it looks like, but really that's our gift to you. If you don't do anything else, check this, and I think it'll be good to
Yeah.
know what's out there, and it'll take any anxiety you have if you're about to apply for a home loan or a
Mhm.
car loan or anything else.
Mhm.
You don't have to worry about that angst because you're going to know what's out there.
Absolutely.
Okay, do you see you?
Do you? I see you.
I see you, and I see you.
Well,
I put up with them every day, guys.
you know what? I know it's true. And we had too much fun even when we made that slide, and it's still relevant, isn't it?
Yes.
All right, guys, this is just a little bit about the UICCU because, of course, we're here for you as well. And I just want you to know, Sheri, Liz, and I, we're here. We're always here to answer any of your questions. We're going to share some more about it. The thing about credit unions, we've all band together. And so if you look at our nationwide ATMs, we've got more than Bank of America. We've got over 50,000 nationwide. And we're also protected by NCUA up to $250,000. So the reality is, although we're local, you know us in Alumni Nation, but all of our products and services you can take with you all throughout the country and anywhere you're traveling internationally as well. We love our home banking app. We use it all the time. It's #1 locally. It's pretty cool and integrated with all kinds of tools like Savvy Money. It gives you loan simulations. So if you're interested in buying a car and you were interested about, well, how much is that car rate going to cost and what is that going to do to me? You can simulate all of those different types of purchases right there. Okay. And we've got that free credit score monitoring, and it gives you a credit score as well. Free. It's all free, and it's all available on the site. And wow, here we are. We got in just on the button.
Time.
Just in time.
We like to talk.
We like to do. And we all three get to be together, and Unk's here today, and that's really
Do
exciting.
we have any other questions?
Well,
Okay.
we're just thankful
Yeah,
to have
thank
this
you guys so much.
opportunity. And we call this the no judgment zone because you know what? With all of us, this is a no judgment free zone. So if you ever have any questions, I'm sure we can get connected and we'd be happy to help.
All right, I think we're giving it back to Ellen.
Yeah.
Thanks again for joining us tonight. As a reminder, a recording of tonight's presentation will be available on our website within the next 10 business days. Have a great evening and ILL.
Bye.
Bye.
Bye.